with Kiva today. This webinar is organized by Making Sense International and our Collaborative Learning Institute. And it's part of the Collab's Apply It webinar series. We're very happy to welcome two representatives from Kiva today, and we want to also thank them for presenting at the Global Youth Economic Opportunities Conference this year, which happened just 2 weeks ago here in Washington, D.C., which is hosted by Making Sense International. Today we're going to join Kiva to learn about its experiences in youth-focused lending, both from the borrower and lender perspective. Kiva uses flexible, risk-tolerant capital to test and develop loan products specifically suited to the needs of youth. And they also engage young people to use microfinance and Kiva as a key tool in learning and to provide a real, dignified, and sustainable difference in the world. I should introduce myself. I'm Patricia Langen, Vice President here at Making Sense International. And I want to thank Mark and Chelsea for putting the webinar together. So let me quickly introduce our speakers today. We have Sahiba Saini, who is Portfolio Manager, South Asia and Middle East, and Jessica Hansen, who is Education Development Manager, both for Kiva. Sahiba is responsible for overseeing and expanding Kiva's partnerships in the South Asia and the Middle East regions, and she drove Kiva's entry into the Indian microfinance market in 2012. She is partnering with organizations that bring economic opportunity to some of the most remote, vulnerable, and excluded populations in the regions. And she has previous experience working with microfinance institutions and banks, including with Planet Finance and SKS Microfinance in India. And Jessica complements Sahiba in that she has a background in international education, local capacity building, and global engagement in sustainable poverty alleviation. She heads Kiva's education initiative to enhance understanding, involvement, and mobilization of students and teachers around microfinance. And prior to Kiva, she worked in remote rural Kenya with local NGOs, and also she's worked with the U.S. Committee for Refugees and Immigrants, Mercy Corps, IRC Women's Refugee Committee, et cetera, et cetera. So I want to pass it off to our very experienced and knowledgeable Kivaites. Take it away.
Thank you, Patricia. And thank you, everyone, for joining us today. I know it's early in the morning for some of you, so thank you for being here. Jesse and I wanted to start off with giving you a quick introduction on Kiva and who we are, if you haven't heard of Kiva before. So Kiva is a nonprofit based in San Francisco whose mission is to connect people through lending to alleviate poverty. So we consider all three of those things equally important parts of our mission, which is connecting people, alleviating poverty, and lending. We're not a charity, and on Kiva, your money actually comes back to you. And so that we believe sort of that's a really unique part of what we do. Just to give you a quick overview of how Kiva works, if you are a lender, you log on to our website and you can make a loan for as little as $25 to an entrepreneur around the world. You would make this transaction using paper or credit card. Kiva partners with local field partners in the different countries that we work in, and these are the organizations that are responsible for vetting borrowers and for managing the loan for us. So we transfer funds to our local field partner, who then disperses the loan to the borrower. And as the borrower repays their loan, our Kiva lenders get paid back on a monthly basis. Once your loan is fully paid back, or once you have $25 in your account, you can either choose to make a loan to another entrepreneur or pull your money out of Kiva. So the repayment schedules for borrowers on Kiva really match how our lenders get paid as well. As borrowers get paid on a monthly basis, we transfer those funds on to our lenders. Just to give you a quick overview of our current statistics, Kiva works in 72 different countries around the world through 219 Kiva partners, although I think as of yesterday that number went up by 2. We've facilitated almost $500 million in total loans and have funded more than 1 million entrepreneurs around the world. Kiva's current repayment rate is about 99%. And what's truly sort of really powerful for me about these numbers is that this is $500 million in total loans that's been made in an increment of $25 from people like you and me. And that to me is sort of what makes Kiva really special, is allowing everyday people to use this platform to make a difference in the world.
And just to tell you a little bit more about our lending base, you can see one of our lenders here, and there's also a logo in the corner because we also have teams that lend together, so groups of people that have common interests or common interests that make loans. Just to give you a sense of the general stats about our lenders, most of them are women. It's about 2/3 that are women. About the same percentage are individuals that are over 35 years of age, but part of my job is really working to build our base in the younger age groups as well. We have almost 1 million lenders. We have about 995,000 at this point, and over 1 million people signed up on the website. So there's a few that we want to really encourage to make loans. In addition, most of them are really well-traveled. Most have been to at least one developing country. Over half of our lender base have been to at least one developing country in their time. And they also are educated. Over 50% of them have a bachelor's degree. People are really drawn to Kiva because they hear about it through friends. That's the most common way that people come to join us, is they've heard through word of mouth from friends or colleagues about Kiva. And then they stay because they're mostly really interested in reading borrower profiles, looking at pictures, and having the sense that they're having a real impact in an individual's life around the world. In addition, a lot of response from our community has been that they lend because it's an alternative to traditional models of charity. As Saba was saying, you can put your money in and your money comes back to you. So not only is it a different model where they can actually see that their money had an impact, it was paid back, but then they have the opportunity to loan it again and again, which most people do. Most people don't withdraw their money from the system. So that's just a little overview of what our lender base is like.
So in terms of our field partner and our borrower base, I started at Kiva almost 3 years ago, and I think we've made sort of a big change in our strategy even in the time frame that I've been here. When Kiva first started, the majority of our field partners, actually all of our field partners, were all microfinance institutions. And we worked in, I'd say, about half the countries that we work in now. We started in Uganda and sort of spread around through Southeast Asia, then Asia, and now work in almost every continent. So initially our field partners were all microfinance institutions, and we realized sort of over time that it was, while microfinance had made a very significant impact and is a very powerful development tool, it was really hard for us to see that all of our field partners, or the majority of them, were offering pretty much the same loan product to all of their clients. There was very little product differentiation, and there was very little actually meeting the needs of different kinds of clients. So as we sort of took our learnings from the first 5 years of Kiva's history and started to, how could we use Kiva's very different financing to really meet the needs of clients. So what I think is really special about Kiva funding that we provide to our field partners is that it's interest-free. So all of our lenders lend interest-free on Kiva because we're a nonprofit. We can't offer them a rate of return. Kiva Capital is also risk-tolerant. So if a Kiva borrower defaults on their loan, our field partner is not responsible for paying us back because our lenders actually bear the risk of that default. It's also very flexible. So Jesse just told you a little bit about our lender base. And these are really people who come to Kiva because they want to make a difference. So when they see, when they lend on Kiva, they lend because what they're looking for is social impact. They're not looking for a financial return. And so given sort of these unique characteristics of Kiva Capital, we really started to look at how can we use our capital to have the maximum social impact, to really allow our lenders to make a difference in people's lives because that's what they're here to do. So we started about 2 years ago to partner not just with microfinance institutions, but with a lot of NGOs and in some cases also for-profit companies that are social enterprises to help create and design products that meet very specific needs of very specific clients. And we'll talk you through what some of the specific examples of that looks like. But one of the initiatives that we launched in the last year actually was working specifically with youth around the world. I will talk to you about specific loan products that we designed in this space, but that's kind of where this we really wanted to use Kiva Capital in ways that traditional finance wasn't working. So work with our field partners to fund products and services that traditional funders would shy away from because they're too risky or they're too expensive. So when Jesse and I did this presentation for the Making Sense conference, we had actually had a group discussion, which I understand is a little difficult in this forum, but we would still love to hear your thoughts. I'll let Jesse talk to you sort of on one of the things that we wanted to hear your thoughts on before we move on to the borrower side.
Absolutely. So this was a really fun activity that we led. We divided our room in half, but of course we'd love to hear from all of you on both sides of this if you have thoughts or comments or questions. The half that I work on is the lender half of the Kiva community. And a lot of young people are really drawn to Kiva. They're very passionate about ending poverty and love innovative ideas like microfinance. So a lot of young people were drawn to Kiva, but there is one restriction that you have to have a PayPal account to loan. And that's something we need to work around. We're not trying to solicit young people for money. So we're looking for other ways that they can get involved individually or through groups on their campuses or through their classrooms. So as a young lender, how could a platform like Kiva best support and empower you to engage in microfinance? That was the question that we posed. We gave people, I think, 10 to 15 minutes to sort of brainstorm as a group and come back to us with their top 5 responses to each of these 2 questions. So if anybody wants to chat in below their questions or comments or thoughts around that idea, please feel free. If we don't see anything for a minute, we can move on to Sahiba's question as well.
Maybe I will talk you through the question in case people would like to start typing. But on the borrower side, what we were really looking for from the audience and from you right now is to give us some ideas for products or services that could really benefit young people. So for Kiva, products generally means loan products. However, we're open to hearing about savings, about insurance. Basically, if you were to put yourself in the shoes of a young person, a potential Kiva borrower that would be funded through our platform, what kinds of products or services could our platform provide for someone like you? And we will, of course, talk you through right after this what we did. But it's really helpful for us to hear from you as well, so we can tell you if we did some of what you suggest.
We're starting to get a few in, so thank you so much. want me to go ahead and do two? Okay. So we have a good handful in. I'm going to respond to, I saw two that were more related to, sorry?
Do you want me to switch slides or?
Oh, no, it's fine. Two that are more related to the portion of the discussion that I'm talking on. So one of them is financial education. I feel like Salva will also cover that in hers. But just to give you a sneak peek of what I'm going to talk about in a moment, financial education is really important to Kiva generally. We have built in part of the platform that I'll show you in a moment is specifically devoted to building financial education for everyone. I really am looking to source this towards other projects, experimental projects that Kiva does in the future when there isn't already an MFI partner individual that is providing financial education and support to individuals. As of now, we're really providing that directly from Kiva to the lender side, and our partners in the field are more so doing that with people on the borrower side, which Salva will talk about. And then I also saw one comment about building a platform through partnerships with schools and universities, which I love because it's so spot on with what we're actually doing. Schools and universities have really reached out to Kiva individually, as you'll see in just a moment, and they were the impetus for us to actually get the KeyVU program, which I work on, going to support students and educators, and you will hear more about that in just a second. So I'll let Salva jump in on any of the ones she wants to respond to.
Sure. There were some actually really great things that I want to touch on really quickly. So someone mentioned electronic savings, and I'm really glad that you did because it's something that's becoming a conversation for us internally now. Kiva's always from sort of, from when we first started, been primarily a lending platform. However, the majority of our borrowers, not just our young borrowers, could really, really benefit from savings as well, obviously. And so the conversation that we're having internally is how can we enable savings through a platform like Kiva. And it's still very much in an ideation phase, but one of the things that we're thinking about is potentially a savings matching program with lenders. So for example, if you were a lender that lent to someone through our youth program, you would also have the option to contribute to a savings matching program after you've made the loan. But these are just sort of ideas that we're thinking about right now. Someone mentioned equity financing, which is sort of a pet project for me, so I was really happy to see that come up as well. Unfortunately, just because of the way that our platform is set up, and because we're a nonprofit, we can't actually do equity financing. However, what we can do is provide really sort of flexible loan products with really flexible terms. So this could be a 10 or a 15-year loan, and because it's either interest-free or at a very low interest rate, to me it almost becomes soft equity. And I will talk you through specific examples of some of those. Financial education, Jesse already talked to you about what we're doing on the borrower side, on the lender side. As far as the borrower side is concerned, this is actually something that we believe very strongly in as well. What we don't want to do is just give people a loan or without giving them sort of the means to actually be able to use that efficiently. So a majority of our field partners actually provide financial services that go beyond just providing lending and savings and insurance. So they do a lot of financial education. A lot of them also provide specifically business incubation trainings, and this is also one of the examples that I'm going to bring up later on. The other initiative that we wanted to mention, since a couple of the things that people brought up connect to this, is I want to say in the last year, Kiva launched this pilot called Kiva Zip, which it's still very much in pilot phase, and we're only doing it in the US and Kenya right now. But the whole idea of Zip is to connect people directly without an intermediary. So there is no field partner that we work through. Borrowers post themselves onto the Kiva Zip platform, and lenders can lend directly to them. The idea is to A, lend interest-free, but then B, also provide lenders and borrowers with a means to have greater communication with each other. And one of the things we're looking into with ZIP is how can we improve communication not just between the borrower and the lender, but also amongst borrowers that are in a lot of cases either doing the same thing or involved in the same sort of business. So in Kenya specifically, in some of the communities that we work in that are farming communities, can we increase communication amongst the borrowers about things that could help each other? Sorry, someone just said you couldn't hear clearly. It's Kiva's Zip. Jesse, do you know what the website is?
I can find it.
But if you go to kiva.org, there is on our homepage, you'll also see a link to the Kiva Zip. That's ZIP.
Kiva.org.
It's zip.kiva.org. Okay, so we will come back to a lot of what we've touched on because I know Jesse's now going to talk to you about what we did do when it comes to empowering some of our young lenders.
Absolutely. So I came to Kiva about a year ago. When I got here, there were already 2,400 different school-based teams, so teams that had self-identified as college or university teams, schools, or youth teams. And each of those teams had anywhere from 2 members to 2,000 members on them. So there was already a lot of interest from the youth and educator communities about Kiva and how to engage. There was an intern here who was a high school student. He was actually the cousin of our president years ago, who actually created his own website called Kiva High School. And there were so many high school students that wanted to get involved, even though Kiva didn't have anything really to do with this website. Youth created it and ran it themselves and encouraged each other to do activities on their campuses that helped them be a part of the Kiva community, to loan through their classrooms or through their youth groups. Another website was created called Campus Kiva because so many college students were excited about Kiva and wanted to get involved. Again, by someone outside of Kiva that really wanted to engage other college students in it. And then teachers started teaching with Kiva. So we would get emails from elementary school teachers or college professors saying that they were using Kiva as a teaching tool, whether in math, science, economics, language studies, social studies, geography, a way to really engage their students in learning mathematics, if it was percentage rates on loans or translating people's profiles on the website. So learning while they were still having an impact on someone around the world. There are 2 examples here that I gave at the conference. One is UC Berkeley. They actually have a group of students there who became our first trustee group. So just to dive a little more into the project that Sahaba was explaining, Kiva Zip, to become a borrower through Kiva Zip, you have to find a trustee who will kind of vet your numbers and your business plan and vouch for you on the Kiva website. So everyone who is brought on as a borrower has to have this individual who's acting as a trustee who says this individual or group of people will pay back their loan, and I have faith in that. And UC Berkeley, they had a group of students that were so engaged with microfinance and wanted to take it to the next level that they actually became our first student group that was a trustee for individuals that they were finding in their community at farmers markets and different things. So they've really taken that next step to really engage in microfinance in their community. The next example is Town School. It's amazing because a lot of different teachers had a similar idea at the same time. And Town School is one of our favorite examples. It's here in San Francisco. It's a 5th grade math teacher who uses her class to have students come up with their own business ideas or proposals. And those students have to convince faculty members that their business plan is good and get $1 to $2 loans out of their teachers. They use that money as the seed capital to start a business. They run the business, pay back their loans, and then use the profits to become lenders. So it's a full circle. They're borrowers, they're business entrepreneurs, and then they become bankers to other people around the world, all within a 5th grade math class. They learn about loans and interest rates and repayment rates. So not only are they learning traditional math, but they're also learning a lot of financial literacy skills as well. So these sorts of examples are what showed us that Kiva was really being used as a learning and teaching tool, and that we could do more to support people in engaging with Kiva. I see there's a question. I'm just reading it really quickly. There's a network of 10,000 professors in 100 countries. That would be fantastic, Jennifer. So we'll definitely connect about that. So would you go to the next slide? So we brainstormed about what we really wanted people to walk away from this program with, what we really want to do with Kiva, with young people and teachers. So these were the 5 objectives that we came up with that were most important to us at Kiva. We also have a sponsor, which is Citi. They're doing, as we saw at the Making Sense conference, which the Citi Foundation helped sponsor, they're doing a lot of really cool stuff with microfinance around the world. So we're just one of the many projects that they're working on. But they, as a financial institution, find financial literacy for young people very important. And of course, we were listening to our student and teacher base about what they thought was important. So this is what came out of it. Real critical thinking about poverty, the interconnected issues of poverty, understanding how they're related, and understanding the innovative approaches to address poverty around the world. Understanding microfinance to a real deeper level. There is what people sometimes refer to as the dark side of microfinance. If it's not talked about, wielded, used in the right way, it can cause harm. And so it's really important to us to make sure that people understand what microfinance is and how to use it well. And also broaden financial inclusion. That's a huge thing for us and for everyone. And just for anybody that's not as familiar with that term, that's just ensuring that everyone around the world, even in remote areas, even with shady sort of credit or anything, that has had no access to credit or capital through traditional banking models, can have access to a way, if they have sound business plans, to get a business started and pull themselves out of poverty. Developing financial literacy is really important to us, of course, as I sort of referred to with the teacher's plan at Town School. Building financial literacy in young people is so crucial and important. And if there's a fun and engaging tool like Kiva where they can learn about loans and credit and interest rates in a way that doesn't put so much pressure on the students themselves as young people trying to figure out how to manage money, we want to help support that. And not only are we supporting that, but we're supporting it while also helping them have an impact on people's lives. It's important to us to cultivate leaders, for sure. We want to help people be experts on these issues. And in relation to the next point, as a leader, be able to help take action themselves and help others take action in a really empowering and sustainable way. Not Band-Aid solutions, but real sustainable solutions that, with the beneficiary communities, really support them, engage them in the process, and really honor their own knowledge and wisdom and abilities to make change in their own community. Would you go to the next slide? Thank you. So this is what came out of it. This is just the top of the KeyVU landing page, which you can go to at keyvu.org. Samba's pulling it up. I think you'll be able to see it through this?
Yes, and I will just post the link in here so that you can.
So Samba's just posted the link for everyone to the KeyVU website. This program actually just launched August 27th, so we are not even a month into the program, and we've had a fantastic response. As of last week, we had over 25,000 viewers to the page. We've had over 6,600 new student group members that have joined the KeyVU community. As I mentioned earlier, we had 2,400 youth, student, or college-based teams in the KeyVU community. And now I think that number has grown by over 100 new teams every week. So it's been a really incredible response. We actually had no idea how people would respond, how much demand there was for this program. But there's a lot there. We have a lot of excitement and engagement from our community. If you go to the next slide as well. So these are the main components of our project. The first is a curriculum. There is a picture of the cover of the curriculum. It's called Exploring Poverty. There's K through 12 lessons that are in line with the new Common Core standards that are rolling out in all public schools in 2014. So already it's incorporating a lot of the experiential and project-based learning that teachers are going to be expected to include in their classrooms going forward. There are also some college-based lessons, so business plans, capstone projects, case studies that college students can use to engage and further their expertise in microfinance, and college professors can use in their classrooms. There's an educator space, so everything that we offer is free. It's available online on an educator website called betterlesson.com. So that's on the KeyVU website. There's a link directly to Better Lesson so that you don't have to worry about remembering that right now. So the educator space provides an arena for teachers to ask questions both to us and to each other, to post new materials, share, and just have a dialogue around using poverty, teaching about poverty and microfinance in the classroom as a really engaging tool. On the KeyVU website, there are also student toolkits, so things that they can use in their own school, in their own lives, to become experts on the topics and to host events, to raise awareness among their peer group about the issues. There's a social media network which now has started in Facebook. There's a KeyVU Facebook group that we have a lot of young people in, so that is more of their forum to communicate and dialogue about the issues. Leader guides and resources are available on the KeyVU website. Team engagement opportunities. Right now the big team engagement is around a video contest. So there's a $30,000 video contest out there. People have participated beyond our wildest dreams. We've had 700 some people that tweeted ideas about engaging youth in microfinance. We've had pitches of storyboards and ideas about what a video or storyline around engaging young people could be. And right now the contest is open. It's a video contest, so please feel free to encourage people to enter if you want. But that's also available on KeyVU. You can find the links to all the information there. And we're really excited to see what kind of inspirational pieces that teachers and students come up with in these video ideas that they're submitting now. The final piece is a summit. It's an in-person conference that we're hosting. About 150 students and teachers will be here in San Francisco with us. They'll visit KeyVU or Kiva headquarters. Most of it will take place at the Hub, which is a really innovative and cool space here in San Francisco. And we'll have experts on poverty, heads of different organizations, global directors from Citi, our president and CEO, a number of great speakers, and engaging activities so that people will really walk away feeling like they are deeper and better experts in understanding and talking about poverty and microfinance, and they have the skills and resources they need to take that back into their own schools and communities. So that's the KeyVU program. I welcome any questions now or at the end. I see Jennifer has an NFT network. We really want to reach out to them as well, so we should definitely take it offline and talk more about that afterwards. So I'll hand it over to Sahaba now, but if you have any questions for me, please feel free at any time.
So when I gave you the introduction to what we're trying to do on the borrower side at Kiva, I very vaguely used the term, have higher social impact. So how do we define social impact at Kiva? We thought about this a lot generally, and what we came up with was serving populations that have been traditionally left out. So one example of that is we work with family members of leprosy patients in India. Working in places that are hard to reach. So for example, South Sudan or Afghanistan, where microfinance really hasn't been able to grow in the same way as it has in other places. Creating products that meet the unique needs of clients. So there are so many examples of this, and I will talk you through some of them. And then finally, at prices that enable savings. So this is mostly Kiva SIP, lending interest-free, or working with our field partners to use Kiva's interest-free funding to lower interest rates to clients, especially very poor clients. So in terms of populations that have been left out, we actually launched a partnership with Solotech last year, which is called the Kiva Arab Youth Initiative. And the idea was to reach out to young people, especially in the Middle East and Arab countries. And what I think is really unique about my region, and both South Asia and the Middle East face the same problem in different ways, is the lack of opportunities for young people. So while in South Asia, there is this huge demographic of really young people, the challenge there is being able to equip them with the skills that they need to be able to access the jobs that are out there. However, in the Middle East, where there is also this huge demographic of young people, the challenge is that there actually aren't any jobs out there. So young people will graduate from universities, but because of the state of the economy in many of these countries in the region, they cannot get jobs. And so Solotech's mandate is to promote entrepreneurship amongst young people in the Arab world. And we partnered with them to be able to provide financing specifically for young people below the ages of 30 in the countries that we work in. So Al-Amal is actually our partner in Yemen, and we have not yet started funding these loans, but I wanted to talk to you about them because I think they're such a great example of what we're trying to do. Most MFIs consider young people too risky because they have no prior business experience, they have no collateral, and so it's very, very difficult for them to be able to get a loan for a startup business, especially if they have no prior record or no prior credit history. And so with Al-Amal, what we're looking to do, and this addresses one of the comments that had come up earlier, is first sort of they're partnering with the local training organization to create a business incubation training. And clients that graduate from this training program will then receive a Kiva loan to start up their own business. And what's really exciting for me about this product is it's not just a youth startup loan, which is risky in and of itself, but it's actually a startup loan for SMEs. So at the same time as giving a young person the opportunity to start their own business, what we're also doing is hopefully creating jobs for other people in the country as well. The other thing that I think is especially unique about this loan product is it's very difficult for young people to get loans for startup businesses, and especially loans from financial institutions that will allow them to also have a grace period. As a lot of us that work in the financial space understand, startup businesses don't start making any profits immediately. They need some time to incubate and grow. And so the Al-Amal loan product hopefully gives them, a 3-month grace period to get started, get some revenue flowing before they actually have to start paying this loan back. The other thing that Kiva's focused very heavily on in the last couple of years is providing access to education for children in developing countries. The real challenge in developing countries is that there is no financial aid available. So even if students get accepted into universities, it's very, very difficult for them to be able to pay their way through, and many of them end up dropping out. So Strathmore University in Kenya was actually our first university partner and one of our first non-MFI partners. We launched with them in order to enable Strathmore to be able to reach out to children from low-income families that often apply to Strathmore but then aren't able to go because they can't afford the tuition fee. Strathmore is a private university and so generally far more expensive than other universities in Kenya. And the loan product that we designed with Strathmore is actually an 11-year full tuition loan with a grace period of what's almost 5 years. So students get a grace period for while they're in school and then also a 6-month grace period after they graduate. I wanted to give you a link to a video that I would love for you to watch when you have the chance. It's the story of Lynn, who is one of our Strathmore borrowers. And she comes from a community in Kenya where girls don't go to college very often. And so she's one of the first girls in her community to be at school. And what's really exciting or remarkable, I think, for me with these loans is that these these students literally would not be able to go to school if it weren't for Kiva lenders. And in a lot of cases, young Kiva lenders that Jesse talked to you about that understand that, you know, they might never see repayments on these loans. We hope that they will, but that's not why they're lending on Kiva. They're lending on Kiva because they want to give people like Lillian the opportunity to go to school. So a lot of what we're doing with, I think, these different initiatives and what we've come to see as Kiva's space in providing financial access to youth is what we would love to do is create almost a demonstration effect. So with some of these higher education loans, with startup loans for young people, what we'd love to do is prove that these actually work. So 5 years from now, when Lillian pays off her student loan, Strathmore could go to a bank in Kenya and say, you know, students like these have proven that they make great clients. They've been able to repay their student loans over time, and we would love for you to come in and fund some of our other students. So the idea is that we would take some of these new concepts that haven't really been proven before, prove that they work, that these specific loan products work, and then hopefully other more commercial funders will come into the space as well. That was the general overview that we wanted to give you, and we wanted to make sure that we reserve some time for questions at the end, which we have. So please feel free to type your questions for both or either Jesse or I. That's a great question, John. So the question is, what other types of institutions besides MFIs and universities do we see partnership opportunities with? Quite honestly, the answer is anything. We've partnered with NGOs. We've partnered with for-profit companies. We've partnered with specifically social enterprises. We've partnered with business incubators. Really just any type of organization that could benefit from having a lending piece added on to their business model. So to give you a quick example outside of the ones that we've talked about, one of our partners is the social enterprise that does water and sanitation projects in Kenya. So they're a small sort of for-profit business called Sanergy. And Sanergy builds toilets in the slums of Nairobi and also has a waste management program that goes with this. And the idea, why they approached us was because they didn't have the cash flows that they needed to be able to build these toilets up front. So Kiva lenders help support communities to actually own these, so the community contributes to paying back the loan over time. It's a very low interest loan, and it's specifically for toilets for communities. So really any types of organizations. We also work with more formal financial institutions. So one of our partners in Mongolia is actually a microfinance bank. That we partner with them in order to start a green energy initiative within the bank.
Jennifer, I think you just asked, so yes, have you ever thought of connecting young people to organizations they're investing in to maybe actually meet, volunteer, partner to, or is that beyond the core business model? So that's a great question. We have a few examples of opportunities that we've come across. It's not as often as we would like to connect young people to the actual borrowers that they've supported. It happens more in cities. So Kiva does have Kiva City projects. There's a Kiva City Little Rock, a Kiva City Detroit, a Kiva City Newark. And then also through that Kiva Zip program that Sahaba was mentioning earlier, people can not only directly communicate with the people that both between the borrower and the lender, so it's person-to-person lending, but it's also got a communication piece to that platform as well. So you can write to the person that you're lending to and ask them questions about how it's going or how they're doing. So through both of those, we've had young people who have been able to go visit the business that they have supported. In one circumstance here in San Francisco, there's a woman that owns a Russian pastry shop. And that school, town school that I mentioned earlier, those fifth grade boys, she was one of the people that they wanted to support. So she's invited them to her shop a number of times to just come visit, and they've invited her to the classroom a number of times as well. So they've definitely built a strong rapport. So there are instances like that, but it's not a core piece of our model at all. We definitely want to be really respectful of people who borrow, that they're there to get a loan and get their business started and not necessarily engage that much, especially with large hordes of young people who want to learn everything from them and ask 1,000 questions. But if they're open to it, we are definitely excited about facilitating those connections as well.
I wanted to take Laura's question next, which was what other vulnerable communities apart from youth are we focusing on? That's a really great question, and I could sit here all day and tell you all about it, so I'll give you a quick overview. We really leave it up to our partners to define vulnerable communities because, as you know, that's going to be different, very different from the country and the context. But we really do want to focus on communities that have been traditionally marginalized, so indigenous communities in a lot of the countries that we work in. But some of my favorite examples are one of our partners actually works specifically with third gender communities in India. So this is a community that is extremely marginalized in the country. They don't the extent of their ostracization is that they can't really get regular jobs. And so the only opportunity that's usually open to them is either begging or turning to prostitution. And so one of our field partners works with these communities to train them. They do a lot of livelihoods training. So they help them start their own business as well and sort of work in groups, self-help groups to create a community-based business. That's just one example. Some of our partners work with borrowers that are HIV positive. For health reasons, we don't necessarily, for privacy reasons, we don't necessarily display that health information on Kiva, but they are classified as vulnerable populations. In a lot of different countries, especially Iraq, so post-conflict countries, we do work with disabled populations as well. But again, that's just sort of the tip of the iceberg. I could really talk to you all day about various examples of vulnerable populations that our partners work with. We also just launched a new partner in Iraq a few weeks ago that specifically works with war widows. So that for us is also a vulnerable population because women in Iraq have traditionally been marginalized. And especially women-headed households are particularly vulnerable because they don't get the same economic opportunities as everyone else. I thought someone was typing a question. So Eugene's question is whether we faced any challenges regarding the policy environment in any of the developing countries we work in. Short answer is yes, and that is actually a significant part of our jobs as portfolio managers is to figure out what the regulatory environment is and how we can work within that. So I think one of our biggest challenges has been launching in India, which we finally did last year after 6 years of trying. And the main reason for that is the Indian government is very strict about foreign funding coming into the country. So there are all sorts of regulations around what types of institutions you can fund, how much funding you can provide them, how long the funding has to stay in the country. And so just because the model works, this creates a whole lot of complexity for us because our lenders get paid back on a monthly basis in all of the other countries except India, because we can actually pull payments out on a monthly basis from India. So according to the Reserve Bank's regulations, any debt funding to a microfinance institution has to stay in the country for a minimum of 3 years. So if you actually go onto Kiva.org and you make a loan to an Indian entrepreneur, you'll see this big warning that tells you that if you make this loan, you will not see any repayments for 3 years. So we face a whole host of regulatory challenges, and they're very different depending on the country. We still haven't launched in Brazil as yet because of similar issues. We haven't been able to work in Egypt because of the regulatory complexities, but it's something that we're constantly working on.
And Jennifer's question is, are you presenting any of this at the Global Youth Summit coming up on October 8th through the 10th in Kuala Lumpur before the Global Entrepreneur Summit? So for my part, I don't think you are. I don't know. But we're actually hosting our own summit starting on October 11th. So we're going to be all hands on deck for at least the KeyVU program. So we will not be presenting at least that part.
And on the partnership side, we're actually going to be attending the Partners Against Poverty Conference, which is around the same date in Manila. And so we're actually hosting a Kiva summit there for our Southeast Asia partners, our field partners in those countries. So we will not be in Kuala Lumpur either.
We should keep them in mind. We'll reach out to them
next year.
Yes.
And Jennifer, we're happy to provide you with any information that you need from us as well if you'd like to talk about either one of our programs.
Absolutely. I'm happy to share my contact information, or if you want to share yours, either way, we'll get in touch after the call.
Sorry, and I am just typing our email addresses in here for you. So if you'd like to reach out to either one or both of us. No. So fine, I can barely read.
Thank you for your contact information, Jennifer, and Salva's just sent ours along as well.
And if you think of any last-minute questions that you couldn't ask today, please feel free to email us. But we'd love to hear any last thoughts from you before we end this. And Laura, thank you for that. Actually, all of our field partners are required to sign on to the CPPs before we launch them as a Kiva partner. So we do work very closely with the SMART campaign. Eugene's question or comment is a concern about a risk of drop-off from school for girls that have successfully set up a business. I hear that concern, and it's definitely something that we do talk to our partners a lot about, especially when it comes to youth loans. I think the two main concerns there for us as an organization are over-indebtedness and also, are we creating any unintended incentives to drop out of school or engage in any other activity that they would have done otherwise if it weren't for this opportunity. And I do think that our partners, as I mentioned before, more in response to Laura, we do require them to sign on to the SMART campaign, mostly because we want them to acknowledge that they will always put clients first. And the incentive of, setting, what we don't want to do is incentivize our partners to have young people set up businesses that will adversely affect them in the long run. So set up a business rather than go to school, or just set up a business without having the right skills to do that. And it is something that, we do empower our field partners to work on more than Kiva does. At the end of the day, we are a financing platform. But I feel your concern, and it is definitely something that we keep in mind when we are looking for partners, making sure that we partner with the right types of organizations that really do put client protection first.
Great. Well, thank you both for your time. It was a wonderful, rewarding webinar for everyone, I'm sure. And for all the participants out there, the email addresses are posted there, and we will also be circulating an email with additional resources and the link to the video if you want to come back and revisit anything that you might have missed. So keep your eyes open for that in the next week. In addition, we encourage you to visit www.youtheconomicopportunities.org, where we have a resource library and other tools and news in the youth economic opportunities arena. And also, if you have any resources or would like to post a blog on our site, please let me know. I'll post my email address here as well. Finally, we'd like you to continue to join us for future webinars. Our next one is October 8th with Suktel, and it's 5 ways to use mobile tech to enhance youth livelihood projects. That will certainly be an engaging and interesting presentation webinar. And in the email I'm sending out, I will also include a list of all our upcoming webinars in this Apply It webinar series that is kindly sponsored by City Foundation. So with that, I will sign off. Thank you very much, Jessica and Saba. It was a great presentation, and we encourage you all to continue to connect.
Thanks so much. Thanks, everybody.